Galla.
Thank you, sir. So let me start with difficulties in deposit mobilization. RRBs have encountered a number of practical difficulties in deposit mobilization. Due to a restrictive lending policy that excludes the richer section of the village society, RRBs are not able to increase their deposits. These potential depositors show least interest in depositing their money with these banks. Further, state, civic bodies and their agencies are also not helping RRBs by maintaining their deposit with the RRBs. This is the main reason for failing to mobilize deposits. I request the Honourable Minister, through you, to please remove these restrictions so that the RRBs can grow more freely. Sir, it is not a propounded theory, but it is a proven one that if you shackle or control something, it cannot become free or expand itself. This is exactly what's happening with the RRBs. The Parent Act says that RRBs will be sponsored by banks, and the sponsored banks subscribe share capital, train RRB personnel, and provide managerial and financial assistance for 5 years. I welcome that 5-year period has been removed by this bill under Clause 2, which proposes to amend Section 3 of the Parent Act. But under the shadow of sponsored banks, RRBs are not able to grow the way they are expected. It is because RRBs are controlled by NABARD, RBI, central government, and sponsored banks. But in 1997, the government has removed control of NABARD, RBI, central bank, but operational responsibility of the RRBs is still kept under the sponsored bank. So I request the Honourable Minister, it's high time to think of formation of National Rural Bank of India with state-level RRBs as its constituents and the branches in every village which will provide RRBs flexibility and improve their overall capabilities. Sir, the RRB's pace of growth in disbursement of loans is slow. Some of the reasons for the slow progress include difficulty to identify the potential small borrowers, as bank staff has been required to make special and sincere efforts in this regard. Most of the small borrowers do not like the bank formalities and prefer to borrow from the informal indigenous sources of finance such as money lenders. The anomalies in rate of interest. RRBs are charging about 14% interest, whereas commercial banks are charging much less. And there's a lack of coordination between officials of the District Credit Planning Committee and the RRBs. Sir, the objective of the Jan Dhan Yojana is to provide rural and urban poor the banking facilities and insurance benefit. And it is expected, since majority of the poor live in rural areas, RRBs are to play a major role in this scheme. But if one looks at the statistics, as of 18th December 2014, RRBs are behind public sector banks not only in opening up of bank accounts under the Jan Dhan Yojana, but also in issuing RuPay cards. Out of 9.7 crore accounts opened so far, RRB's contribution is just 1.68 crores, 1.43 in rural and 25 lakhs in urban areas. And the number of RuPay cards issued is just 49.75 lakhs. This clearly shows that RRBs are still not able to penetrate into poorer sections. It is primarily because its operations are limited to the area notified by the government, limiting to just 1 or 2 districts. So my first point, there needs to be an expansion of the area of the operations for RRBs. Each RRB should be permitted to go wherever it wants. Hence, I request the Honourable Minister to give RRBs a free hand for their operations so that they will spread their operations and reach out to as many poor people as possible. Coming to share capital of RRBs. Clause 3 of the bill aims to amend Section 5 of the RRB Act 1976 by permitting RRBs to raise the capital from market by keeping the combined share of central government, state government, and sponsored bank at 51%. Now, under the proposed amendment, the share capital of the RRBs could be split into 200 crore equity shares of 10 rupees each, when compared to the present arrangement, which is 5 crore share capital of RRBs split into 5 lakh shares of 100 rupees each. This move of the government would help RRBs to mop up funds from the capital market. It is necessary since financial constraints are being faced by the central government, state government, and also sponsored banks are finding it difficult to provide financial assistance to the RRBs. Here again, the government has done a good job by keeping the combined share of central, state, and sponsored bank to be not less than 51%. It is a part of the reform process. As we know, last month, government has allowed public sector banks to raise funds from the market by keeping its share up to 52%. It is primarily to meet the Basel III norms by the banks. Our ultimate objective is to ensure that RRBs to have more reach to the rural areas. The success of rural credit in our country largely depends on the financial strength. There is no doubt that RRBs are the key financing institution at the rural level, which shoulders responsibility of meeting credit needs of different types of rural areas. At present, most of the regional rural banks are facing the problems of overdue, expansion, infrastructure, technology, recovery, NPAs, and other problems. If we succeed in overcoming these difficulties, I'm confident that we can bring the image of RRBs as the common man's bank. Thank you very much, sir. Thank you for giving me the time.